Welcome to the Master the Margin podcast, your dose of pharmacy accounting and tax topics to help you take your pharmacy to the next level. Good afternoon, everybody, to another episode or another version of our Master the Margin content here at Sykes and Company. Got Kathy Blanchard, myself, Scotty Sykes here. And Kathy, today's topic is a common paymaster. And we run into this quite a bit sometimes for larger groups, which is kind of common in pharmacy, where with the average owner having an ownership in 2.5 or 2.8 pharmacies, something like that. Last NCPA Digest that was out. Kathy, what is a common paymaster and what do pharmacies need to be looking out for?
Well, basically, a common paymaster is a situation where one of our pharmacy entities in a controlled group is processing payroll for all of the locations. And we have to be very mindful of what the IRS's rules are for a common paymaster. Benefits here, as far as, you only pay Social Security, FUTA, and SUTA one time if the employee works at multiple locations. But the rule specifically states that that employee or employees must work amongst all of the locations. So Scotty can't just work at store number 1 and store number 1 has a specific group of staff. Scotty has to work at store 2 or store 3 along with store 1. He has to work at more than one of the locations for it to be a qualified common paymaster.
That's right. And so 9 times out of 10, that's not the case. And so if you're a multi-store owner, your default really is that each location, unless you have all of them under one entity. But if you have different, let's say you have 5 pharmacies and they're all different LLCs, each entity is going to have its own payroll set up, its own payroll processing, its own payroll tax returns, each entity, because most likely you don't have all those employees working among all the different stores. In fact, that'd be really rare for that to happen. So a common paymaster is really something that is...
It's a unicorn.
It is a unicorn. So, so if you are processing one payroll run for all your different locations, you do need to take a time out there and review that, make sure that's the appropriate way to be handling that.
Right, it does give you a shortcut on benefits, and you only process payroll one time. Your staff only get one W-2. But in theory, they should be getting a W-2 from each of the federal ID numbers that they work under.
Yep.
So,
and that goes back to controlled group conversation. And pharmacies that own multiple locations, multiple stores, need to be aware of the controlled group rules. And a controlled group rule for IRS purposes is where the IRS is going to treat you as owning where all those different entities, let's say you own 5 different LLCs and you are the 100% owner of all of them, all those entities are part of a controlled group. And so for different tax attributes, different tax strategies, you have to consider all 5 of your pharmacies in this case as one. So for example, the cash method of accounting is, I believe it's $30 million is the revenue threshold there. You have to be under. And so you have to count the revenue from all 5 of your pharmacies as one group to meet that test. So you can't do it individually. So that also applies to benefits for your employees, 401k, health insurance, payroll matters. So if you got a 401k you're a multi-store owner, you'll see where the 401k folks were asking you about common ownership and things like that with your entities. This would apply there, and it also applies for other IRS strategies and rules. So you need to be aware of the controlled group rules as well if you're a multi-store owner.
Thanks for tuning in. If you like this episode and want more content, including bonus episodes, exclusive town halls, and other perks, head over to masterthemargin.substack.com or click the link in the show notes to subscribe.